How are you handling the higher interest rates? Is it killing your cash flow after refinance? I'm feeling discouraged from using private money in these conditions. So, the only thing that the higher interest rates impact from this business model, if you're analyzing it from a cash flow perspective, not from an appreciation perspective, is the cash flow. So, yes, each time interest rates increase, the amount of cash flow that you have is going to decrease. So, while the interest rates are still going up, your cash flow is going to continue getting smaller. Yes, that is factual. The good news for, I guess, real estate investors is, interest rates aren't like this thing that only impacts one industry, right? So everybody's impacted. The whole reason they're playing around with the interest rates right now are to try and combat inflation. Inflation impacts everything from, egg prices to insurance rates and subsequently, taxes and also rents. So you are able to increase rents, and you probably should increase rents in order to offset your higher costs that are associated with investing in the property. And I will say that you should never buy borderline or bad deals, right? However, if you are interested in buying an asset, if it makes sense and you want to hold it for the next 30, 40, 50 years, I mean, you're a really young guy. So you've got time on your side where if you find a good deal because there are fewer buyers, because it is more expensive, then you should probably take it down if it's an asset that you are interested in holding for a very long time. You shouldn't let the interest rates deter you. If it's a borderline deal or the interest rates now make it a bad deal, which is probably going to be pretty prevalent in more competitive markets, then you should hold off on buying that deal. Warren Buffett has this cool thing that he says about batting averages. I don't understand sports, or especially not baseball, enough to understand the analogy in all the ways that I'm sure it works. But, he says that batters will have a lower batting average because at a certain point you're forced to take swings on less than ideal pitches. Whereas in the business or in the investing world, that force to buy deals isn't there. So you could, in theory, have a significantly higher or perfect batting average if you just sit and wait for the good deals that come your way, because nobody is forcing you to make an investment that you're not interested in standing behind. So I think that's prudent. I definitely think that is an appropriate way to think about things.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.